All right, let's talk about fintech because something massive is changing. For what, the last decade? The whole game was about one thing: disruption. Well, it looks like that playbook is being completely torn up. And this quote right here, it absolutely nails it. After all those years of fintechs shouting from the rooftops that they didn't need the big banks, what are they doing now? They're plugging themselves right into the very system they once wanted to replace. So, this is the whole story in a nutshell. The old goal was disrupt the system. The new reality is become the system. It's a huge shift, and to really get it, we're going to look at three perfect examples. Okay, first up, Revolut. You know the name, they're one of the biggest players out there. And their story is a masterclass in how a pure disruptor is slowly turning into the exact thing it was built to fight: a bank. I mean, first, you just have to appreciate the sheer scale we're talking about here. Over 40 million customers globally since they started back in 2015. That is a huge number of people who signed up for that promise of a cooler, faster alternative to your parents' bank. But here's the catch, the really important part. For most of that time, in its home base in the UK, Revolut wasn't really a bank. They had this thing called an e-money license, which is kind of like having one hand tied behind your back. It limited what they could do. But now, they've got a full UK banking license. And that, well, that changes the entire game. So that begs the obvious question, right? It feels totally backward. Why on earth would a fast, cool tech company want to become a slow, boring, super regulated bank? The answer is actually pretty simple. One word: lending. Look, getting fees from payments and having a slick app is awesome for getting users in the door, but the real, serious money, the kind that builds a lasting institution, that comes from interest. And that banking license is the key that unlocks the door to lending on a massive scale. That's the prize. All right, let's pivot to our second story, which builds on this idea perfectly. We're going from a flashy consumer app to something, well, way less flashy. We're diving into the deep infrastructure, the plumbing, with a company called BitGo. They're doing the boring work that turns out to be incredibly important for institutional crypto. So what's the big problem they're tackling? Well, if you're a big shot institution, think a huge asset manager or a trading firm, and you want to move money around using stablecoins, it's kind of a nightmare. It's totally fragmented, every system is different, every connection is unique. It makes moving large sums of money really slow and, frankly, a bit of a headache. And the solution is building proper infrastructure. Just think about it like this. It's the standardized pipes and roads for money. You can't build a functioning city without plumbing and highways, right? It's the same idea. Big institutional money isn't going to flow into crypto until those reliable roads are built. And that really gets to the core of it. Yeah, it's not flashy, it's not exciting, but this backstage work is so critical. If crypto ever wants to play in the big leagues of global finance, it's the companies building this boring stuff, this foundation, that might just end up being the most valuable of them all. Okay, for our last story, we're flipping the script. We're not looking at a startup anymore. We're looking at one of the giants, Mastercard, and how they're playing this game. And surprise, surprise, it's not about disruption at all. It's pure integration. It's the empire learning to absorb the new tech. And honestly, Mastercard is running the classic playbook for a giant like them. It's so simple, it's brilliant. Step 1, a new technology pops up, like blockchain. Step 2, you don't fight it, that's a losing game. Step 3, you just make sure it runs through your network. Why build a new kingdom when you can just expand the borders of your own, right? It's incredibly smart. And here's what that looks like in the real world. Just look at this list of partners. You've got names you know, like SoFi, but then you've got these fintech infrastructure players like Marqeta and Galileo. What's Mastercard doing? They're sitting right in the middle of all of it, acting as the hub, the connector for everyone. So the end goal for them is to be the ultimate bridge. They want to link the old world of banking with the new world of blockchain and do it so smoothly that you, the user, have no idea what's happening under the hood. All you know is that it works. And that guarantees they stay right at the heart of every single payment. Okay, let's step back and pull these three threads together. Because when you put Revolut, BitGo, and Mastercard side by side, a really clear picture starts to emerge. This isn't about replacement anymore. The system isn't being disrupted. It's just getting bigger. This chart really lays it all out, doesn't it? You've got Revolut, which is all about a mature fintech finally embracing the old school model to make real money. Then you've got BitGo, proving that for crypto to grow up, it needs that solid, boring plumbing.
And finally, Mastercard shows how the big guys will always choose to integrate, not fight. It's three totally different angles on the exact same trend: integration.
Which leaves us with one final thought to chew on. As all these different worlds, fintech, crypto, old school banking, all start to blend together, does that mean the revolution is over? Did the disruptors lose? Or, and this is the interesting part, maybe this merger, this integration, maybe this is what the revolution actually looks like in its final form.